Good evening, good evening, good evening. Hey, how you doing? Y'all come on in. Y'all come on in. Y'all come on in. Let me go through. Um it won't let me get rid of this video right here. Click that. More actions. I don't need the other one that I just did. Yes, I can delete that. Yes, I can delete that. I was just deleting that other live video that I just did. Good evening, everybody. If you don't know who I am, my name is Timothy Lee Rogers Sr. Tonight on this dinner discussion, I will actually be eating dinner. And myself, as well as my very lovely wife, she hates it when people do what I am doing right now, which is partaking of the vittles while I'm on live. Yep. Let me share my screen. What's up, Mendez? What's up here, Learn to Share? Add the stream. Y'all see right over there? Let me turn on my fancy dancy. Y'all see right over here? This is what I was talking about on the other one. I was like, I knew we was going to bounce off the bottom of that fair value gap because when we opened up over here, we came and we dropped down. You know what I'm saying? When we started out to the downside, I said, yep, we finna hit this and bounce. And we did. We bounced back up to the top. Now, I'm gonna go in, do my standard chart prep, and then we'll go through and look at the chart to see what we may anticipate. Let's go up. Daily. Mm-mm. The daily. Mm-mm. Daily. Mm-mm. Turn all this other stuff off. My new day opening gaps, my new week opening gaps, my old PD arrays. Turn all that off. What's this Fibonacci here? Oh, that Fibonacci was something we was watching. I could delete that. What timeline is this Fibonacci on? Visibility. It's on the hourly. Let's see what that is. Oh, that's the gradients for that fair value gap there. I'll leave that there. I'll put that inside that folder. What is this for? That's a 1 hour fair value gap. Oh, that's the one from earlier that we had trade. I could take that one off. That's the one we was watching earlier. We was waiting for it to act as resistance, and it did. I'm going to take that one off. All right. Now, let's go back to the day. Oh, hold on. Before we go to the daily, let's look at the dollar compared to the other index. So on the top, we got the dollar. These hourly candles here. On top, we got the dollar. The dollar came down to that weekly fair value gap. And then, like we said, I don't know if it was Monday or Tuesday when we was talking, but it was like, so it's Tuesday here. So it probably was around Tuesday when we was like the dollar trying to make a reversal. And here we are. On Thursday, we're up here. So that played out like we anticipated. We got extreme divergence still between the indexes, right? So since we got this extreme divergence, the NQ was the strength leader, right? And then now the NQ is the weakness leader, right? So the NQ kind of gave us a prelude of what the ES was going to do to the upside, right? And now the ES has gotten up to that weekly stuff that the NQ had got up to that weekly stuff a while back. You know what I'm saying? Now the ES has gotten up there, and now the NQ is dropping. So is the NQ about to be is prelude the word I'm looking for? It's about to be is it, see, these are the lows that the NQ has attacked, right? If we look at these same lows over here, the ES has not gotten there, and the ES has come down into the area of some anticipated support, getting close to some anticipated support with these breakers here, right? And then the Dow, right, looking at those same lows, right? The Dow ain't even showing no interest at all yet. The Dow ain't even get to, it ain't even trying to get to the support. It ain't even trying to get to the BISI right in this area. I know you probably said, Tim, we can't even see those candles. It ain't important about seeing the actual PD arrays. I'm just looking at the overall move right now. Right. So looking at where the dollar is, and the dollar is ripping, and the ES has hit like a weekly the ES has hit a weekly point where the NQ had hit them weekly points a while back, and now the NQ is pulling back. I'm gonna give y'all, it ain't nothing I made up. I got this from Michael J. Huddleston, right? But the way I go in to look to see if a run still have legs or not, or if, oh, wait a minute, I just see my homeboy back there. Hold on. Coochie, cool. Coochie, cool. I pull out the Fibonacci's, right? And I run the projections to see if we're topping out, if we've hit the top, if I get some kind of confirmation that we're to the top. Remember earlier today on the live when I pulled out the Timonucci's to see if that run was going to continue, and we kind of stayed there for a little while, and then once we finished that run, we dropped and then started reversing, right? Because that let me know that run was done. So we did a drop down and start reversing. That's why I was anticipating the reversal. But why am I still looking at the screen? I need to look at y'all. I was anticipating the reversal because when I ran the Timonucci's, it was like, this should be the end of this run. So that leg was done, and then we got a leg down and started a reversal, right? Not saying we're going to reverse and keep going back up, but we had like a little pull back into the end of the day, or a retracement into the end of the day, should I say. So let's jump over here to the ES real quick. What is this? Hourly candles. Yep, I like to do it on hourly when I'm looking at like higher time frame ranges. Like if I'm looking at something for like it's been running for a few days, like we got here on Friday, right? And then now here it is like the next week. This been over a whole week. So I like to do the Fibonacci extension on the hourlies when it's consistent over a few days, because the hourly is giving me all of the moves and the motions that you want to be trying to enter in if you're looking at the daily candles. So let me grab my Timonucci's, or the Fibonacci's. We ain't gonna do no Timonucci's, right? So what I do, I found the bottom. I find the bottom, right? This is the bottom. What makes this the bottom? Because after we took out this sell side right here, we got a break in market structure to the upside, and then we started going up. That would make that the bottom. So I find the price leg, right, that started the entire move, right? That started the entire move. Then I go from the low of that leg, like come down here, like this low and that low, they're equal. So I'm just going to go to this one, right? And then I'm go back to the high of that price leg. So from the low to the high, right? That's where I go, right? Now let me change this to the projection, TLR projections. Now I can see I got to put a little bit more on there because we up above the projections, right? So let me extend this to the right. Extend it to the right so I can see. Let me hide all this other stuff so we can see what's going on there. All right, so look like we only need to put like maybe one more on there, because looking at the spacing, what y'all think? One more? Yeah, one more should be enough, right? So let's put one more on there, right? Let's go to -6.5 because the highest we went was -6. Let's go to -6.5, and let's just do a -7 just in case one is not enough. -7, -6. Okay, we're gonna do a -7 just in case. Well, I be Malanta Jones. Look where -6.5 went to right there. -6.5, -6.5, right? Gave us 460, 4609.25, right? Let's see what the high of this candle is right here. The high of that candle right there is 4609.25. You can't make this stuff up. You cannot make this stuff up. I'm glad y'all was on here live with me to see this call. Yeah, it won't nobody believe you. Tim, you just be saying stuff, Tim. You be saying stuff. You can't make this up. That says, I don't know if y'all can read that. Let me see if I can blow that up. Can I blow that up? Yes, I can blow that up. That says -6.5 standard deviations from the low to the high of that price leg is 4609.25. The high of this candle right here, look at that H right there. The high of this candle right here says 4609.25. You can't make this stuff up. Why is that getting bigger? Oh, it's not getting bigger. It's getting smaller. Hold on, man. There it is. All right, 100%. There you go. Right there. So with that being, that took me by surprise. With that being said, right, if the ES is ready to come down, this right here is some confirmation that this price leg has peaked, because it went exact to that standard deviation, came back down. Does that mean it's going to reverse? No, that don't mean it's going to reverse, but that right there gives confirmation. I wish I would have did this earlier, like earlier in the week, because even though I was able to get a couple shorts, I would have been looking really hard for shorts. I would have been like more bearish. This whole week I ain't had no bias. So I just been trading with no bias. I just been trading whatever the market presented. So now that that's that, we see that. And then the ES continuing down like the NQ and pulling the Dow down with it, supports the dollar continuing up. Now, the dollar has been ripping. ES NQ has been ripping to the downside. So a pull back on the dollar into this area, maybe this fair value gap, that fair value gap, and then continuing up would be wanted, not expected, wanted, because it's running on gas right now. And for the ES to retrace back up into this area here and then continue down would support the idea of the dollar coming down to this area here and continuing up. So that being said, let's get to market. Let's go to the daily. Can you please show your fib settings? Fib settings for what? Talk about the projections. On the projections, it's just every point 0.5, like from 0 to negative 0.5, negative 0.1, because that's the direction I go for projecting. Sammy, you must be new here. Sammy, you must be new here. So on the project, I got a couple different um I got a couple different templates for fibs. I only use fibs for specific things, right? So if I'm projecting something, right, my settings are every 0.5, right? We got the 0, 0.5, and the 1. That's the base of the fib where you pulling it, right? Everything else, when I'm projecting, I use negatives. And the reason why I use negatives, because whichever direction you drag the fib, right? If you're looking for price to go up, right, you drag the fib up, right? And you want it to project up. So you put in negative numbers because you know what I'm saying? You're dragging it up, so it's going to project up with the negative numbers. If you expect it to go down, you anchor the fib and then you drag the fib down and it'll project down. But since it's negative numbers, you don't never have to change that again. It just shows you the projection, and the projections are every 0.5, every half a standard deviation point. So you set up your fib to have the 0, the 0.5, and the 1, right? That's your first standard deviation, right? You got the 0, 0.5, and the 1, and then you just go negative 0.5, negative 1, negative 1.5, negative 2, negative 2.5, however far you want to go. And the reason why you break it down like this right here, because with the methods that ICT teach, everything is broke down into quadrants, right? So when the algorithm moves, it's going to move in reference to standard deviations, and then it breaks it down into quadrants, and then you can break the quadrants down into quadrants. So you know what I'm saying, it just get deep. So just think about cutting everything into quarters, right? You can cut a fair value gap into quarters, you can cut a deviation into quarters, you can cut a deviation in half, but that's why it's broke down in half standard deviation. So when you have your projections, you can get very, very accurate projections. You know what I'm saying? Look at how price reacts to these, like this 2.5 standard deviation right there was at 45, 65, 50, right? And the high of this candle right here was at 45, 65, 75. So we got a mohawk on that and then rejected down. Look at the reaction from that, from this right here, the same price leg. As price went up, we hit that 2.5 standard deviation, had a serious rejection off of that. Just look at how price react to that area. You know what I'm saying? And then the tippy top of the top was up here at 6.5, right? Even here on this 0.5 standard deviation, went above that right there. Matter of fact, let's go in here. Let's go in here and put another one in between there. So let's put in a 5.25 and see if it hit anywhere near that negative 5.25. Right, put in a negative 5.25, extended out to the side. Look at that. See that counter right there? So that counter came to that negative 5.25, went one tick above it and rejected off of there. Everything is in quarters. You can break down everything in quarters. All right. So when you go from a half standard deviation, when it looked like it's falling in between, that's why everything based off consequent encroachment, mean thresholds, everything is broke down in halves and quarters, right? So that's what it's all about. And see how it responded to that negative 5.25, wicked off of there. I can't make this stuff up. You can't make this stuff up. Now stop distracting me, Sammy. All right, where was I? Okay, let's go to the daily. My food is ice cold right now. Ain't got no daily lines. Oh, I put 100 and I put 11 days. What in the world? Like, I didn't even know I got some daily lines in here. Put 11 days. Okay, so wait a minute, unlock this stuff. So, God dog it, Tim. Unlock. All right, so daily. Can't get this.
Yeah, but Dan,
Yes.
I think we need to wash my clothes now because I'm out of shorts.
You out of shorts?
And yes, and I'm out of undershirts.
Okay. Well, you can't wash the shorts and the undershirts together. The undershirt is white, right?
Yes. I know we have to wash them separately.
Okay. Yeah, go ahead and knock yourself. Knock it out. Go ahead and handle that. All right. Okay. So mark that low there. That's the low for the day. Okay, gonna check it out. Tim and ICT did a video. My stand even. I don't know the exact date. Yeah, I don't know the exact date either. Out of shorts, tell them. No, that was funny. I ain't gonna hold you. That was funny, man. Oh my goodness, that was funny. So, Mark, for those who don't know how I do my charts, like I know Sammy New here. Uh, I basically go in and I look at on the daily. First thing I identify is the prior day's low and high, right? The prior day's low and high. I call it the box top and the box bottom. So box top daily. Identify the prior day's low and high. That's the first thing I try to do. Cause um price always seeking liquidity and balance. It's looking for liquidity and balance. Liquidity is found above highs and below lows. And then the imbalances are found in gaps and fair value gaps. So that's what the market be looking for. So I identify all that stuff with markings on the chart that I learned from Michael J. Huddleston. His since we're this far down here from that, I'm going to delete this consequent encroachment of that daily wick. I care not about it anymore because we're so far away from there. Let's see what this consequent look like here. We've come down to consequent encroachment there. That consequent encroachment, as we know, is lining up with that hourly fair value gap that we saw right down here on that when we came down to that quarter, that first quarter of that what's the name? No, not that one. This one here. When we came down to the low, that this is from earlier today. I'm tripping. When I was like, I knew we was gonna bounce off that hourly fair value gap. When we was like coming down, boom. That's the hourly fair value gap that we bounced off of. And then here go back to what we was talking about earlier today with confluence, right? We was talking about confluence on the hourly. We were anticipating it to bounce off the bottom of this hourly fair value gap, but on the daily, it's bouncing off consequent encroachment of the daily wick from yesterday, which was the trading day for today. But as we know, the futures start at 6 p.m. at night. So yesterday was what we traded today in futures world. Hope I didn't confuse you. But consequent encroachment of that, I will go ahead and put it there. Even though we already know it's there, I will still go ahead and put it there. I don't know the price of it because the price ain't on this quads. So the low of that is 61.75, 61.75. That is it. Right click, template, CE of a wick, a discount wick, CE of wick, discount. That's going to be a day. Move that Fibonacci tool. All right, so we've come down. Did we touch the top of that? No, we didn't. I was trying to see if we touched the top of this. Now we did come into the wick of this potential order block today. Right there, we came into that wick right there of this potential order block right there on today's candle or yesterday's candle. But today's candle, we came down to consequent encroachment of yesterday's candle on the daily. The low of the week is still in place. The high of the week is still in place. We came up very close to the top of this weekly SIBI, right? Very close to the top. And then now we know that that exact price was a 6.5 standard deviation extension from the run that we started back at whatever day we started it. I don't know what day we started it because I didn't look at the day. I just on the hour. Let's see what day it was. Because I know somebody gonna be like, "What day was that? When did we started? What low did you use? Oh my goodness, what?" It was back here on Monday. All right, it was back here on Monday. And we used this price leg right there, the price leg that started this move right here. So it was back on Monday the 17th. Yes, this Monday. That's the price leg right there. Between the 4 a.m. candle on Monday and the 6 a.m. or the 8 a.m., they had the same low. Both on 32.75, 30. No, it was 28 there. I used this one here. Which one I use? 28.50 and 28.75. I think I used the 28.50. That one. I used that green one there. So it was one tick difference. But I used the lowest one, apparently. So it was that 8 o'clock candle. All right. So the daily was done. I peek at the 4 hour, but sometimes I'll mark stuff on that if it's like super, super stand out ish, right? Like that breaker right there. I have marked that breaker there, and it actually lined up. That breaker that I marked out actually lined up with the hourly breaker too. So that green line there is for a breaker. Um, we see that the body of this 4 hour candle respected this daily fair value gap, right? We came all the way down into the wick of this breaker. Y'all know on the higher time frame breakers, right? On the higher time frame breakers, the most sensitive area is from the wick to the body. And if you notice, this candle came just below consequent encroachment of that wick on that 4 hour breaker and then reverse. Reverse. Right. So, and I didn't know that until I just ran that. I just know ICT teaches, the most sensitive part of it is from the wick to the body, especially on the higher time frames. He didn't say that, but I've noticed like on the higher time frames, this is the most sensitive area. And you can break a wick down into quarters also. In that red line is consequent encroachment. So we came down just below consequent encroachment, right? Got into that down close candle right there. What's the open of that? Open of that down close candle is 455725. The low of this candle right here is 455725. So right into the open of that down close candle, just below consequent encroachment of that breaker wick, and then bang, we took off. And then the body of the candle respected the daily fair value gap. That's about all I want to look at on the 4 hour. I don't do a lot of stuff on the 4 hour. Let's go down to the 1 hour, and then that's going to be the end of it. So looking at the 1 hour, this hourly fair value gap, it did its job. We anticipated that acting as resistance earlier. We was talking about that. Because we were trying to get back long but we didn't get an opportunity to do so. And we said once we get back to this fair value gap right there, it should act as resistance and push us back down. And it did. It pushed us back down. You can even see here when we wicked all the way through it and got up above the midnight open. I think that went above midnight, and it did. Went above the midnight open. Beautiful shorting opportunity for anybody who like to short or go long right at midnight. It went all the way up. This is the 12 p.m. candle. Went all the way up to the midnight open. Then look where the bodies respected it. This 11 a.m. body respected that. We went all the way up, came down. The 12 p.m. body respected that. Once we closed below it, this next candle came up, hurt, stopped right there. Gave an institutional order flow entry drill, one tick into it, and then nothing could stop me. I'm all the way down. We came down, right? Repriced this Bissy right here. We repriced the Bissy, came all the way down into this Bissy below it, going 1/4 into it. And when I was talking about you can break down fair value gaps into quarters, we went 1/4 into that Bissy right there. Right now, back to confluence, what we was talking about. Remember, on the 4-hour, this low right here was consequent going below consequent encroachment on that wick of the 4-hour breaker, right? Right. So this right here, this, let me bring this over, right? We can extend this over, wrong way. Let's extend this over, right? As I extend that out, bring that over, Look at there. Look at there. Now we went down to 1/4 of the fair value gap, right? And we've come, right? We've come just below consequent encroachment right to the down close candle on the hourly. We did that exact same thing on the 4-hour. Right, on the 4-hour chart, we came just below consequent encroachment of the 4-hour breaker and touch the exact open of that down close candle next to it. On the hourly, we came to 1/4 of the fair value gap, but we also did the exact same thing with the breaker, right? Now, this time we got two types of confluence on here. We got identical confluence on the hourly and the 4-hour, where we did the exact same thing on the breaker and the candle next to it. And then we got a, let's just call it a linear confluence, where we were coming down to a 0.25 fib of the fair value gap in the same place as something different on the 4-hour. So we got a breaker wick, a breaker consequent encroachment on the 4-hour, and then we got a 0.25 fair value gap on the hourly. So that's the linear confluence. I just made that word up. That linear confluence, and then the exact confluence also here with the breaker CE and the counter next to it. Can't make this stuff up, man. I'm glad I decided to do this with y'all, cause this kind of stuff I be seeing every day, and I be trying to go back and explain it, and y'all be like, Tim, I understand it when you be saying it, but I don't know what you're talking about right now. Just get that back over. That making me undo the whole thing. All right. Okay, so all right, so now we've That's the consequent. That's the wick. So this candle came down. Remember, we came down to that daily consequent encroachment of the wick. That's the when we came down and we there goes some more confluence again. I think we talked about that. Yeah, we talked about that already with the consequent encroachment of the wick and the fair value gap. Now, um, I'm gonna make this gray because we've repriced it and we've come to the bottom of it and we're trading inside of it now. So if we get a closure above this, I'm expecting this to act as support. If we get a closure below it, I'm expecting it to act as resistance because it it has now been repriced, right? Because it had buy side delivery. Now it's gotten sell side delivery, and now we're just bouncing inside of it. So once we leave it, the algo is identifying this as a balanced price range. So whichever way it leaves, I'm expecting it to be support or resistance. And if you don't understand what I said about that, ICT got a video about it somewhere. Um, so this one is done. It's far ways away. I'm not gonna make it gray. You know what? I am gonna make it gray, and I'm gonna put it in the old PD array folder. Like sometimes when stuff once the PD arrays get used, and I think the market is going to give me a different PD array to react off of, I'll move it to a folder called old PD arrays, and I'll keep them there until um, I decide I want to see how them old PD arrays popping up. I didn't put that in the folder. Let's see them how them old PD arrays pop up like that. I'll keep them there until I decide to redo my charts and start over from scratch. So now I need a SIBI. We got a SIBI right here. All right. So hourly bearish fair value gap right there. Want to show it on the hourly and below. So now we got a SIBI right there. So with the dollar needing to pull back to hit this and maybe continue up, I would love to see the ES push up, take care of this hourly. All right, then let's go. Let's drop lower to see if there's anything else. I'll take this order block off there because we came down to it, used it, pushed back up. You can see right here we came down we went down to something on the lower time frame, respected that order block. Or that's what we was talking about earlier, waiting on the hourly counter to close above this order block right here. Right, we touched the order block there, then we pushed back up, opened here, pushed up above midnight, and then we dropped back down and broke through the order block. So that order block did its job by pushing us back up above midnight to give whoever was waiting there opportunity to get short, right, from above midnight. Again, if you know anything about price, the best time to try to get short is above the open, right? You have daily opens, session opens, candle opens. You know what I'm saying? You have different opens. So the 12 o'clock midnight is the daily open. So it was given the opportunity to get above the daily open and drop, right? You can get above the session open, right? This even gave opportunity to get above the session open, which was like 9:30. So this is the 9 o'clock candle here. So we opened up there at 9. So the 9:30 candle is in here somewhere. I would have to go to 15-minute to find out where 9:30 is. We'll look at that in a minute. All right, so here's the 9:30 candle right here. So you got above the 9:30 open also. So this gave opportunity to get above the session open, gave opportunity to get above the daily open, and then drop down right there. On the 15-minute, there's a little imbalance there above that hourly. So getting back up to this order block right here. So we got a bearish order block. We had a bullish order block over up. Look at this. Look how this stuff be lining up, right? We had a bullish order block over here, right? We got a bearish order block over here. So in the scene of a market maker sell model, you got opposing order blocks right there. And looky who stole the cookie right here on this 15-minute 2 o'clock candle. Came right back up to that bearish order block, right in line with the bullish order block from on that side of the market maker sell model right here. And it dropped down. The market maker sell model, when you get them opposing order blocks, right, trade back up into it. It's a nice shorting opportunity. Boom, right there. Look at who stole the cookie. Look at who stole the cookie. Understand all of the what's the names comes in handy. Now, those aren't my trading models, so I wouldn't have been able to take advantage of any of that. Just like I didn't get an opportunity to get anything short today because I got missed in the morning, and this afternoon didn't present anything that was my setup. So just understand, knowing what price gonna do ain't gonna guarantee you're gonna make money, but it takes the scariness out of it. Okay, we're consolidating here. Would like to see an attack on this. That will put us back into this mitigation block. We got a breaker up here. Got a breaker, mitigation block, bearish order block, bearish breaker, bearish mitigation block, bearish order block with this 15-minute SIBI right above the hourly SIBI. Then there's a tiny SIBI up here, a tiny volume imbalance up there, right? So let's see if they hit us with the 52 fake out tomorrow and try to just end the week bullish and get all the way back up here and take care of this little piece of this right here. Or will they continue with the bearishness of the NASDAQ and push us back up into this imbalance, into this breaking market structure there, and then come on back down and take care of some of this gap work? That's all I got for marking up my chart. I ain't gonna mark no more. If you want a screenshot of the chart, copy link. Just put it in the Discord. I mean, in the chat right there. So if you want a screenshot of it, you can have it. Those are hourly candles. That's all I got. Appreciate y'all for hanging out with me. I jollipies for smacking in y'all ear. Does anybody have anything before I go? Feel free to ask while I take a sip of this Sam's Cola. Ugh. That was good. I see nothing in the chat. I'll take that as no questions. So as we get ready to close it, please do me a favor. Take advantage of the day. Let your loved ones know that you love them with everything in you. Don't just say it. Don't just show it. Say it, show it, and confirm it. Open up the lines of communication with your significant other, with your parents, with your children, with your friends, so that they'll understand your love language and you'll understand their love language. If you're in a relationship or have a family member and their love language is words of affirmation, don't go over there and rub their feet. They're not going to understand physical touch as a love language. They need words of affirmation and vice versa. Whatever their love language is, speak in their love language so they can receive the love that you're trying to give them. Ain't nobody promised tomorrow. It's a lot of stupid stuff going on in the world today. People with the fake babies kidnapping and babies on the side of the road and all kind of stupid stuff. But people do all kind of stuff for attention. Let's give people the attention that we need to give them. The attention that, hey, I love you. I know you love me. Let's live this life to the fullest together. Let's block out all the stupidness, block out all the hate. Let's just love on each other. That's why I love. That's what I love about the Spider Gang family. As far as I know, everybody genuine people. Those that I've met in person, they the same people in person that their online persona portrays, and I appreciate that. That's the energy I want around me from here to infinity and beyond. If you got grown kids, call them up and say, "Hey, Daddy, think about you. Mama, think about you." If you're blessed enough for your parents to still be here, my mother's still here. I do my best to let her know that I love her. I do my best to let her know I appreciate everything she sacrificed for me. I do my best to let her know you don't have to worry about a thing. My beautiful wife supports me in this. When her mother was still with us, we did the same for her mother. You know, her dad, my dad's no longer here. Her mother's no longer here, but we do what we can while we still are blessed with the time to do so. If you got furry loved ones. I know people treat their pets like family. My brother treat his dog like his little daughter. My daughter treat her dog like her little daughter. So love on your pets too, man. Where is the love? Where is the love? Hey man, I appreciate y'all, man. Appreciate y'all for hanging out with me. Hopefully, I said something that helped somebody. If I didn't, I would try my best on the next time. I feel like getting on Al Gore's internet and talking about the price. Until then, y'all be safe, man. Gone.